Friends, now we are going to take up another unit in partnership accounts. The second unit is goodwill. Again, this is a very, very important lesson because if you are good in this lesson, then you could do any problems on the other chapters. In other words, I can say like this. If you are not good in goodwill, then it is difficult to solve any problems on admission, retirement or death. So in order to be good in other chapters, this is the most important one. So in this lesson, we are going to learn what is the meaning of goodwill, how to value the goodwill, how to account the goodwill and so on, like that. Surely you will be getting 4 marks from this lesson. As part of a bigger problem, there will be an adjustment which comprises of goodwill. So it is a sure question in the examination. Let's go further. So what is the learning objective? In this lesson, we are going to learn how to value the goodwill and how to account the goodwill. Goodwill. What is the meaning of goodwill? Goodwill is defined as reputation of a business. Goodwill is defined as reputation of a business. But let us understand clearly that reputation here means positive reputation, not negative reputation. A person may be reputed for various reasons, but is it for positive reason or negative reason? That is where the difference is. So therefore, if a business has a positive reputation, then you can say it is goodwill, positive reputation. It is also defined as the ability of a business to earn excess profits over normal profits. See, if a business has a reputation, has a goodwill, it will definitely earn more profits than the normal profits. That is a premium people would like to pay. For example, you buy an ordinary shirt without a brand, you may get it for 500 rupees. But if that is a branded dress, branded garment, you will pay 1500. Why? That 1000 is only for the name, nothing else. That name is put somewhere here. So by looking at the name, you are ready to pay for more, is it not? So therefore, if your business is reputed, they produce good branded products, definitely they'll make better profits than others. So if a firm has an ability to earn excess profit over normal profit, you can say that business has a positive reputation. That is another way of calculating the goodwill. Next. What are the different methods of valuation of goodwill? How to value the goodwill? When to value the goodwill? First of all, number one, you should understand the valuation of goodwill is not mandatory. It's not compulsory. But Under certain circumstances, it becomes necessary to find the value of goodwill. See, you may have various assets in your possession. Do you value it quite often? No. Only when the need arises to value that, you value. For example, we have a lot of jewelry in our house. Do we value that always? No. Suppose you want to sell that jewelry or want to pledge that jewelry to take a loan from bank. In such circumstances only, we try to find the value of our assets. Suppose you have a land. You don't find the value quite often, but you want to sell the land or you want to pledge the land to get a loan from bank, then at that circumstance, we tend to find the value of the land. Like that, goodwill is also an asset. It's an intangible asset. Why it is called an intangible asset? Because you can only feel the goodwill. You can't see that. You can't measure it physically because it doesn't exist physically. It does not have a physical shape or size or color or design. But it exists. In reality, you can find there is goodwill, but you can't see it in your naked eyes. That is not possible. So if anything cannot be measured in physical terms, you call that as intangible. But it is possible to find the value. So please understand, friends, the difference between measurement and valuation. Measurement is normally in quantitative terms, physical terms. Whereas when I say valuation, that is also measurement but in terms of money. Goodwill can be measured in terms of money but not in quantitative terms. So which an item, if it cannot be measured quantitatively, then you call that as intangible. Like that, I can say if you are feeling very happy on a certain day, that is an intangible benefit you are getting. Can you measure the happiness? Suppose you are very sad on a particular day. Can you measure the sadness? These are all intangibles. But you can measure the length and breadth of a table or the length and breadth of a circumference of a land. That is possible. A building can be measured, but you can't measure the happiness or sorrow. You can't measure goodwill. You can't measure the intelligence of a person. Human resource is something which you can't measure. So all these come under the category of intangibles. Goodwill is also an intangible asset. Now, how to value the goodwill? There are various methods which are prescribed for valuing the goodwill. Let us see the methods one by one. Average profit basis, super profit basis, capitalization basis. Three methods are there: average profit basis, super profit basis, capitalization basis. See, goodwill is an asset. How to find the value of that? An asset is capable of generating income. Based on its ability to earn income, you can find the value of that asset. Suppose you have a building. How to find the value of the building? The building generates rental income. Over a period of next to 20 years, it can generate rental income. So if the rental income is 20,000 a month, in 1 year you will earn 2,40,000. In 20 years you will earn 24 lakhs or 48 lakhs. That is the basis on which you value any asset. Similarly, goodwill also being an asset. As I told you in the beginning, if a firm has a goodwill, if a business has a goodwill, necessarily it will earn better profits, it will earn profits. So therefore, the consequence of goodwill is profit. Hence, profit is the basis for valuation of goodwill. Therefore, whether you follow average profit method or super profit method or capitalization method, profit is the basis for calculating the goodwill. Now, how to calculate goodwill by average profit basis? We will see the formula for this. Very simple. Goodwill is equal to average profit multiplied by number of years. Goodwill is equal to average profit multiplied by number of years. The number of years are the expectation of the future. In how many years in the future you will earn the same average profit that you have earned in the past. So average profit is based on the past performance. If you extrapolate the past performance in the future of so many years, you will get the value of goodwill. How to find the average profit? Very simple. Average profit is equal to profit for the last 3 years divided by 3. It need not be always 3, it can be 4. Then what we should do? Find the profit of the last 4 years, add it, divide by 4, you will get the average profit. It is nothing but sigma x by n, simple formula for determining the average profit. If x is the profit of every year, n is the number of years, average profit can be determined by this formula sigma x by n. X is the profit for first year, second year, third year. Suppose if the profit for first year is P1, second year P2, third year P3, fourth year P4, add all that, divide by 4, you will get the average profit. This average profit multiplied by number of years. Number of years is the future expectation. See, this is the profit the firm has made on an average over the last 3-4 years. I am expecting the firm to make a same profit in the next 4 years or next 2 years or next 3 years. So if average profit is so much, I am expecting the firm to earn the same profit next 3 years. I multiply by 3, I get the value of goodwill. Is it not? Very simple, friends. So in order to calculate goodwill by average profit method, what information you need? Very simple, you need profits of the last 3 years or 4 years. Then how many years you have to multiply, that will be given in the question. So the problem will tell you value goodwill on the basis of 4 years purchase of the average of the last 3 years profit. That means what you should do? First, find the average of the last 3 years profit, multiply that by 4, you will get the value of goodwill. Simple one, is it not? Sometimes the average profit should be determined by weighted average also. This is the formula for simple average. Simple average. Simple formula, add the profits of all 4 years, divide by 4, you will get the simple average. But sometimes you may have to calculate the profit by goodwill by weighted average profit method. What is weighted average? See, simple average takes into consideration only the profit. But weighted average takes into consideration the efforts put in by the business to make that profit. That efforts put in by them is known as the weight. What is the formula to calculate weighted average profit? It is equal to W1 P1 plus W2 P2 plus W3 P3 plus W4 P4 divided by W1 plus W2 plus W3 plus W4. What is W? W1 is the weight for the first year. W2 weight of second year. W3 weight of third year and so on. So multiply the weight of the first year by the profit of first year, W1 P1. Weight of second year, profit of second year, W2 P2. Like that you keep on finding the product. Then add the products. That is the numerator divided by the sum of the weights, you will get the weighted average profit. So in short, the formula is like this: sigma W into P divided by sigma W. Now the question is, sir, should I apply simple average or weighted average? Which formula I should apply? If you ask me, it's very, very easy. The problem will tell you which average you have to follow. But you should also come to a conclusion whether weighted average method can be used. Now I will tell you when you should follow weighted average method. Suppose for example P1 20,000, P2 40,000, P3 80,000 and P4 2 lakhs. So what are you able to see from the profits given in this situation? The profits keep on increasing 20, 40, 80, 2 lakh. There is a constant increase in profit. So the profit shows a trend. Increasing trend is shown in the profits. In such cases, we should follow weighted average. On the contrary, if P1 is 40,000, P2 is 30,000 and P3 is 50,000. See, here the profit does not show any definite trend. It goes down, it goes up, it keeps fluctuating. It is not showing a same trend. Whereas in this case, it's on the increasing trend. Therefore, we should go for weighted average. Here, it goes up and down. Therefore, we should go for simple average. So, we should not simply go by the formula, apply the mind. See the trend of profits. If the profits keep on increasing or decreasing, we have to go for weighted average profit. If the profit keeps fluctuating between up and down, better to go for simple average profit. Find the average either by simple or weighted, then multiply by number of years, you will get the value of goodwill. Now, weight, whether it will be given in the question. Yes, sometimes the weight will be given in the question itself. Weight for first year 4, second year 6, third year 12, like that they may give. Then we have to apply that weights only. But sometimes the weights may not be given. And most of the time I find in the exam, the weights are not given at all. Then what you should do? Very simple. If the profits are increasing every year, then the weights ought to be given in the ascending order. For example, the weight for first year will be 1, second year 2, third year 3, fourth year 4 and so on. Suppose the profits are decreasing, then you give the weights in the descending order. But generally, when the profits are decreasing, you find that the firm may not have a goodwill. Only when a firm is continuously making better profits, then you can say it is having a reputation. So you have to find the value of goodwill. So whether we should follow simple or weighted depends on the trend of profit. Weights may be given in the question, you follow that. If weights are not given, you apply 1, 2, 3, 4 as a weights for the first, second, third, fourth year in the ascending order. Then of course you can easily calculate the weighted average profit. So let us now see an illustration how to calculate the value of goodwill by simple average profit as well as weighted average profit. Profit for first year 40,000, second year 60,000, third year 50,000, fourth year 40,000. You have to tell me whether we should follow simple average or weighted average. First year 40, then 60, again 50 and 40. So the profit keeps moving up and down. Therefore, we should follow simple average method for valuing the goodwill. So the profit goes like this, then comes down and down. Therefore, we should follow which method? Simple average method for determining the profit. So what is a simple average? Simple average is equal to 40,000 plus 60,000 plus 50,000 plus 40,000 divided by 4 years. So 40 plus 60, 1 lakh, 1 lakh 90 by 4. 1,90,000 by 4 will be the average profit, which is 47,500. That is the average profit. Then how to find the value of goodwill? Depending upon how many years of purchase given in the question. Suppose they say goodwill is 5 times of the average profit, then it will be 47,500 into 5, which is equal to rupees 2,37,500. So based on the profits given in the question, you have to come to a conclusion whether you have to follow simple or weighted average. In this problem, profits go up and come down. So we have to follow simple average, find the average, add the profit of all 4 years, divide by 4. They will get 47,500, multiply by number of years, you get the value of goodwill. Simple average method. Now let me give you another problem. P1 40,000, P2 60,000, P3 80,000, P4 1 lakh. Find the value of goodwill based on average profit of 5 years. Now you are able to see there is a trend 40, 60, 80, 1 lakh. The profits keep going up. So therefore we should follow weighted average method. Since the profit shows increasing trend, we should go for weighted average method. How to find the weighted average? Whether the weights are given in the question? No. Therefore, what we should do? Weight for the first year is 1, second year 2 and so on. In ascending order we have to put. Now in that case, let us calculate the weighted average in this manner. Profit 40,000, 60,000, 80,000, 1 lakh. Weight, since not given 1, 2, 3, 4, find the total of weight. Multiply weight by profit. Weight into profit. How much? 40,000, 1 lakh, 20,000, 2 lakh, 40,000, 4 lakhs. Find the total of the product and the total of the weights. Total of weights is 10. What is the total of product? 40 plus 120 is 160, 163, 164, 8 lakhs. The total is 8 lakhs. Therefore, what is the weighted average? The formula is sigma WP divided by sigma. Sigma means you know summation. So the total of weight into profit divided by total of weight will get you the average profit, which is equal to how much? 8 lakh divided by 10. So the weighted average profit is 80,000. Suppose the goodwill is 5 times of the average profit. 5 years purchase of average profit. goodwill is equal to 80,000 into 5, that is equal to rupees 4 lakhs. Average profit method is the most simplest method to get the value of goodwill. Simple average, profit goes up and down. Weighted average, profits keep going up, increasing trend. This is the way we have to calculate the goodwill, friends, by following average profit method. Let's go to the next method. Super profit method. What is super profit method? Profit earned by the business which is over and above the profit earned by others. See, when you do better than others, you are called super, is it not? That's why we call a person a superstar. One person is earning only 1 crore, another person earning 5 crores, but doing the same business. Then we call that person super, is it not? So, if there are many companies in a same industry, one company is making a profit of 1 lakh, another company making a profit of 5 lakhs, means that company which makes profit of 5 lakh is a super company. It makes super profit. So, based on the super profit, you have to calculate the value of goodwill. So, what is the formula for that? Goodwill is equal to super profit into number of years. So, the difference between this and that method is what? In the average method, you multiply average profit by number of years. In super profit method, you multiply super profit by number of years. That means you have to calculate the super profit first. How to calculate super profit? Super profit is equal to average profit minus normal profit. You know how to calculate average profit. Just now we have seen either simple average or weighted average. Based on the last 4 years of profit, we know how to calculate average profit. So, first calculate that. But how to calculate normal profit? Normal profit is equal to capital employed into normal rate of return, NRR, normal rate of return. So, what is actually normal profit? See, you are engaging in a business in a certain industry. In that industry, if you invest 1 lakh, you will get a profit of 10,000 normally. That means the rate of return in that industry is 10%. 1 lakh is the investment, 10,000 is a profit. So, normally in that industry, the rate of return is 10%. So, you are also doing business in a particular industry. In that industry, the rate of return is 10% normally. What is the capital employed by you? You have to multiply that by the normal rate of return, will get the normal profit. It means what? By investing in this business in a certain industry, I should have made a profit of 50,000 rupees. Suppose my investment is 5 lakh. The rate of return is 10%. So, by investing in this business in the particular industry, my normal profit should have been 50,000. But my average profit is 70,000. Understand carefully. Others have invested 5 lakh, they got a profit of 50,000, 10%, normal profit. I have also invested the same 5 lakh in that particular industry, but I am getting a profit of 70,000. So, capital is same, investment is same, but profit is more. By employing the same capital, if I make better profit, the reason is because I have a reputation. Are you able to understand? See, there may be two doctors. One doctor charging 100 rupees for a consulting. Another doctor charging 200 rupees. Why? The doctor is famous. The doctor has a name. Both are doctors. Both have completed the medical degree. But why one doctor gets 100, another doctor gets 200? Probably the doctor who gets 200 is having a better name than the other one. Qualification wise, both are same. So, like that. I am investing 5 lakh in a company. My rate of return is 10%, 50,000 only. But somebody else is investing the same 5 lakh. But they are getting 1 lakh profit. Are they not super? When capital is constant, when the profit is more, the person who makes better profit has goodwill. That is a concept. Therefore, what we do? To determine super profit, we compare the average profit with normal profit. Normal profit is what is the profit you would have earned from the same business in that industry. Average is what you have earned. If what you have earned is more than normal, you are super. The difference is called super profit. That you have to multiply by number of years to find the value of your goodwill. Clear? So, first to find normal profit. Capital employed into normal rate of return. Then find super profit, average minus normal. How to find average? Either simple or weighted. Then find the value of goodwill. So, this is the order in which you have to do the problem. First, normal profit, then super profit, then goodwill. That is how you have to calculate. How to find capital employed? Normally it is given in the question. Suppose it is not given, then we can calculate capital employed is equal to assets minus liabilities. So, this is another formula. So, in order to calculate goodwill by super profit method, you need to remember capital employed equal to asset minus liability. Normal profit is capital employed rate of return. Super profit is average profit minus normal rate. So, goodwill is super profit into number of years. So, if you remember all that and you're able to do the calculations perfectly, you can easily get the value of goodwill by super profit method. Let's go to the next one. Let us take a problem based on super profits. Profit for the first year 5 lakhs. Second year 7 lakhs. Third year 10 lakhs. Capital employed equal to 100 lakhs. 100 lakhs. Normal rate of return is 10%. Goodwill is equal to super profit into 5. Find the value of goodwill by 5 years purchase of super profit. We are given profit for the last 3 years, capital employed, normal rate of return. How to find the value of goodwill? We have to see. We can see in this problem, the profits are continuously increasing. Therefore, we have to find the weighted average. How to find the weighted average? 5 lakh into 1, 5 lakh. So the weight is 1. Second year, 7 lakh into 2, 14 lakhs. Third year, 10 lakh into 3, 30 lakhs. So find the total of weight, 6. Total of weighted profit is 30 plus 44, 49 lakhs. Let's take the profit first year as 4 lakhs. It will be easy. So 4 lakh into 1 is 4 lakh. So finally it comes to 48 lakhs. So what is a weighted average? Weighted average is equal to 48 lakhs divided by 6 equal to 8 lakhs. That is the weighted average. Now we have to find the normal profit. What is a normal profit? That is equal to 100 lakhs into 10%, that is equal to 10 lakhs. Normal profit is what? Capital employed into rate of return. It is 100 lakhs in 10%, that is 10 lakhs. Therefore, what is super profit? Super profit is equal to average profit, that is 8 lakhs, minus normal profit, that is 10 lakhs. You are getting the answer as minus 2 lakh. What is the value of goodwill? What is the value of goodwill? Goodwill is equal to super profit multiplied by 5. What is the super profit? Minus 2 lakh. That means this business is not making super profit at all. When other business are making a profit of 10 lakh, your business is making an average profit of 8 lakhs only. That means you are not making good profits. You are not making better profits. Therefore, friends, don't just blindly apply the formula. Apply your mind. So if super profit is positive, that means what? Your profit is more than the normal profit. Then you can say you are super. Suppose in an examination, normally everybody gets 60, you get 70. That means you are super. But you get 60. Everybody gets 60, you get 50. That means you are not super, is it not? You are below average. So only when the super profit is positive, then you multiply that by number of years to get the goodwill. In this problem, luckily it so happened that the average profit was 8 lakhs, but the normal profit was 10 lakh. So in this business, you are not making even the normal profit. That means your business does not have goodwill. Does not have goodwill. Understand carefully. But suppose the capital was 50 lakhs. Suppose. Okay. I have taken capital as 100 lakhs. Normal profit is 10 lakhs. Average profit is 8 lakh only. Super profit is negative. When super profit is negative, then the goodwill is nil. Whereas, suppose the capital employed was 50 lakhs only, not 100 lakhs. Let us see what is the super profit. If capital is equal to 50 lakhs, Then what is normal profit? Normal profit is 50 lakhs into 10%, that is equal to rupees 5 lakhs. Now what is the super profit in that case? In that case, super profit will be 8 lakhs average profit minus 5 lakh normal profit. Therefore, you are making a super profit of 3 lakh. It is positive. Now only you have to multiply the super profit by number of years to get the value of goodwill. So, goodwill is equal to 3 lakh into 5, that is equal to rupees 15 lakhs. So, from this, what do we understand, friends? We understand goodwill will never be negative because you are determining the value of goodwill. Value cannot be negative. Value can be 0 or positive. So, therefore, when you calculate super profit, suppose it is negative, then you immediately say the value of goodwill is nil. Only when it is positive, then you multiply that by the number of years to get the value of goodwill. So, what we should remember, friends? Goodwill is always positive. You remember I told you. Goodwill is the positive reputation, not negative reputation. Somebody has a negative reputation, they don't have goodwill, they have ill will. They don't have good name. People don't buy those products. So the company is not making good profits. So only when it is positive, then you can say there is a goodwill. Only when the company has a positive reputation, there is goodwill. So if super profit is positive, goodwill is 15 lakhs. Super profit is negative. Don't multiply 2 lakhs by 5 and say minus 10 lakh is my goodwill. Goodwill can never be negative. It can be 0, but it cannot be negative. So fortunately, 2 different ways in which we can find the goodwill I have shown here. Then we have capitalization method. Another method of calculating the goodwill is called capitalization method. First, I will show you the formula for capitalization method. This can be done by average profits or super profits. So, when I calculate goodwill by average profit method, what is the formula? I can also calculate goodwill by capitalization of super profits. What is the formula? So first I will take this, then I will do this, okay? Find capitalized value of business, which is equal to average profit divided by rate of return. That means first to find the average profit, divided by rate of return, you will get the capitalized value of the business. From this you deduct actual capital employed. You deduct actual capital employed, the difference will be goodwill, provided it is positive. Suppose capitalized value is less, actual capital is more, then there is no goodwill. For example, if average profit is 100, 10 lakhs, rate is 10%, it will be 100 lakhs is the capitalized value. Suppose if actual capital is 80 lakhs, then goodwill equal to 20 positive. On the contrary, suppose if capitalized value is 80, actual is 100, it is negative, then there is no goodwill. So keep in mind always one very important information, goodwill can never be negative, it is always positive. Whether you follow average profit method or super profit method or capitalization method. Here what we are doing is, for capitalization we have two different formula. Capitalization based on average profits. What is the formula? Divide the average profit by rate of return, then deduct the actual capital. If the difference is positive, goodwill; difference is negative, no goodwill. Now the capitalization method can be used to find the goodwill based on super profits also. We call it as capitalization of super profits. Capitalization of super profits. What is the formula to find the value of goodwill? Goodwill is equal to super profits divided by rate of return. Divided by rate of return. That means, if the question asks you to find the goodwill by capitalization of super profit, first you find the super profit. Divide by rate of return, will get the goodwill. Suppose if super profit is 4,50,000 and the rate of return is 10%, then the goodwill in that case will be 45 lakhs. So in the case of capitalization average profit, first to find capitalized value, average profit by rate of return, deduct actual capital from that. If it is positive, that is goodwill, whereas capitalization of super profit will be first to find super profit, divide by rate, you will get the value of goodwill. I am assuming super profit is 4,50,000, rate is 10%, therefore the goodwill is 45 lakhs. We will now see an example how to value the goodwill by various methods. Okay. Suppose average profit is 2 lakhs. Capital employed is 10 lakhs. Normal rate of return is 10%. Find the value of goodwill by various methods. By various methods, let us try to calculate the value of goodwill. So first we will do average profit method. What is the answer? Goodwill is equal to average profit into number of years. Average profit is given in the problem as 2 lakhs. Suppose number of years is 3, the value of goodwill is 6 lakhs. Let us try to find the value of goodwill by super profit method for this problem. So already we have average profit of 2 lakhs. We have to find the normal profit. Normal profit is equal to capital employed, that is 10 lakh into 10%, that is 1 lakh. So what is super profit? Super profit is equal to average minus normal. Average is 2 lakhs, normal is 1 lakh, therefore the super profit is 1 lakh. Suppose if number of years is 3, goodwill is equal to 1 lakh into 3, that is equal to 3 lakhs. See the same problem. By average profit method it is 6 lakh. By super profit method it is 3 lakh. Suppose we follow capitalization method. First you divide the average profit by rate of return. Average profit is 2 lakh. Divide by rate of return 10%, that is equal to 20 lakhs. Minus actual capital. It is given as 10 lakhs in this problem. Therefore, the goodwill by capitalization method is 10 lakhs. You can also find the goodwill by capitalization of super profits. So another formula is goodwill is equal to super profit divided by rate of return. Super profit is 1 lakh. So 1 lakh divided by 10%, that is equal to rupees 10 lakhs. So friends, same problem. Average profit method, goodwill is 6 lakh. Super profit method, goodwill is 3 lakhs. Capitalization method, goodwill is 10 lakh. But under capitalization method, we have two different formula. Whichever formula you apply, the value for goodwill should be the same. That cannot change. Only when you change the method, the value of goodwill will change. But when you apply a different formula under capitalization method, the value of goodwill will not change. So, average profit method, super profit method, and also capitalization method. There is another method, friends, that's very, very important method called annuity method. That's what we are going to see now. Under this method, the value of goodwill will be goodwill is equal to either average profit or super profit multiplied by annuity value. See, in all the three methods which we learned so far, we do not consider the time value of money. If the average profit is 2 lakh now, I simply multiply by 3 and say in the next 3 years I will make a profit of 6 lakh. But you know very well, friends, there is something called present value technique. 1 rupee earned today and the 1 rupee earned after 1 year are not one and the same, is it not? If you earn 1 rupee today, you have 1 rupee. But suppose you have 1 rupee after 1 year, is it same? You earn 1 rupee after 2 years, is it same as today's 1 rupee? No. So as time goes on, the value of money keeps decreasing. But in the earlier three methods, whether it is average profit method, or it is super profit method or capitalization method, we have not considered the time value of money. Whereas under annuity method, we are going to take into consideration how the value of money decreases over a period of time. So this method takes into consideration time value of money. Therefore, under this method, value of goodwill is equal to average profit or super profit multiplied by annuity value. How to find the annuity value? Sometimes it is given in the question itself. Annuity value is 3.1053, something like they give, then it is easy. Find the average profit, super profit, multiply, you get the value of goodwill. But sometimes in the exam, the annuity value may not be given. How to find the annuity value? Annuity value is equal to sum of present value How to find the present value? Present value is equal to 1 by 1 plus r whole power n, where n will be the number of years, r is the rate of discount or rate of interest. So r is the rate, n is the number of years. So if I want to find the present value of 1 rupee after 1 year, I should put 1 by 1 plus r whole power n. If I want to find the present value of 1 rupee after 2 years, in the place of n I should put 2. So like that, I have to find the present value of 1 rupee at the end of first year, second year, third year, fourth year, like that. I add all that, I'll get the annuity value. So therefore, let us assume the rate to be 10% and n to be 4. Let us see what is the annuity value. So the present value at the end of 1 year, called P1, is equal to what? 1 by 1 plus 10% whole power 1. P2 will be the present value of 1 rupee at the end of 2 years. That will be 1 by 1 plus 10% whole power 2. P3 will be 1 by 1 plus 10% whole power 3. P4 is equal to 1 by 1 plus 10% whole power 4. If you do all this, friends, the total, you can do the calculation, see, you'll get the total as 3.1079. Some number you will get like this. This 3.1079 is known as the annuity value. If you know the annuity value of 1 rupee at the rate of 10% for 4 years, and you already have calculated super profit or average profit, you multiply that by 3.1079, you will get the value of goodwill. Okay? So therefore, goodwill based on annuity value is equal to, you know the average profit is 2 lakh, you multiply that by 3.1079, you will get the value of goodwill. Or you want to apply super profit, then multiply super profit by the annuity value of 3.1079, you will get the value of goodwill. So, if they ask you to do the valuation of goodwill by annuity method, the formula is average profit or super profit into annuity value. That means first find average profit or super profit, then multiply by annuity value. If annuity value is given, you apply that. If it is not given, you have to calculate annuity value like this. What is the rate? What is the number of years? Apply that. Find the present value of 1 rupee at the end of first year, second year, third year, fourth year. Add all that. You will get the annuity value. This number should be multiplied by the average profit or super profit to get the value of goodwill. That is how we determine value of goodwill by annuity method. So friends, with this we come to the end of this unit on goodwill.